Okay, thank you very much, guys. You are watching right now the Q&A part, which follows webinar that we just concluded. And the webinar was our weekly webinar on real estate taxation for realtors and real estate investors. And webinar was about travel, meals, and entertainment deduction. So right now I'm going to answer some of the questions that we received during our webinar. We'll take maybe another 15 minutes or so talking about questions. So let me see what we have here. Okay, first is, okay, let's see. Okay, I'm taking my own car and not flying, not renting a car. Can I deduct gas? Okay, the question was, okay, I'll repeat the question. Question was from a realtor who watched our webinar. It says, okay, he is not flying to to his out of town destination on travel, just driving his own car, which is of course, frequent situation. Okay, if you're driving your own car, what do you do with gas? Because you went out of town, came to that place, and you have to fill up your car again. No, you cannot deduct the gas. It's treated completely differently. It's treated as automobile deduction. We had one of our webinars dedicated to business driving, how you deduct it. Back there on that webinar, it's available on our YouTube channel. We talked about two different methods. You either track miles or you track actual expenses. So if you use mileage method, the way it would work, let's say you drove out of town, it was a 300 miles one-way trip. So it was 300 miles one way, 300 miles back. Here is 600, and you drove another 100 while at the place. So we have 700 miles. That 700 miles give you on the standard mileage allowance method that IRS gives you about 50 cents per mile. So 700 miles give you roughly 350, between 350 and 400 will be the number after you apply that standard mileage allowance. That will be your deduction. So what happens with your gas? Gas is part of that. It's included in mileage allowance. It's not an additional expense. Now, if you use the other method for driving, again, neither one is travel expense. It's automobile expense. So that other method will be, you will take actual expenses. That's where you do track gas. You are not counting miles. You still need mileage log, and I'll remind in a second why you need it. So you will track gas as well as everything else you spend on maintaining your car. So it will be your gas, your insurance, your repairs, inspections, whatever else. You add that up, and then you apply business use percentage. So business use percentage will be calculated as number of miles you've driven for business your entire year, not at business trip, entire year, divided by total number of miles you put on the odometer of your car, total miles you drove that year for all purposes. Obviously, if you make frequent business trips, your mileage will go higher, so your business use percentage will be higher. But that's the only method where you will be tracking the actual gas expense. So either mileage allowance, where you don't need to track gas specifically, or percentage of actual expenses, that's where gas will count. But you will never deduct that just one receipt for gas which you filled out at a place of travel, unless that was a rented car. If you rented car there, then the cost of renting and the cost of gas of the rental car, that will be a straight deduction. But if it was your own car, that's not how it works. Hopefully I clarified that question. Send me back, send us another email if I did not completely answer your question. I'm going to the next one. Okay, our next one here. Okay, let's see. Okay, next one is this. Okay, what if my husband goes with me when I attend our annual convention? Okay, good question. Okay, thanks for asking. So what happens if you take your spouse with you? Let's say you are going to an annual meeting of your realtor organization or convention, or some training seminar, and your spouse accompanies you on that trip. Okay, so what happens here? You basically have to divide your costs. And no, you don't necessarily, I don't mean you take the whole cost of the trip and divide it 50-50. This is how it's calculated. First, let's look at tickets. So if you flew there, I think it should be pretty obvious to everyone. You just taking the cost of your ticket. If it was you and your spouse, only your ticket is deductible. Your spouse ticket will only be deductible if your spouse is with you in the business. And then the whole question will be pointless, because if your spouse is also an agent and you work together, yes, then your combined costs are deductible. There is no confusion. But if your husband simply accompanies you on the trip and is not part of your business, then only your ticket is deductible. Next, we are talking about what happens with hotels. With hotels, it's not half of the room. The way we'll have to calculate it is a little bit maybe funny of a calculation, but IRS will ask you how much that room would cost if it was just you. And if it happens that the cost of the single or double room is the same, if you would have paid the same amount for that room, whether you were alone or with your spouse, then the entire lodging cost will be deductible anyway, even though you will argue that the cost is the same, and the IRS will agree with you. Now, if you rented a bigger room because now there are two of you, then you have to make an adjustment and remove that extra cost that you incurred because you are with your spouse. Lastly is deductions for meals there. Only your portion will be deductible. So if both of you go and spend your meals together, pay for that, you will have to take only your portion, and it will be 50% of your portion. So I hope I answered that question. The question was about how expenses are treated if you take your spouse on a business trip with you. Okay, let's see what else we have. Okay, I heard that as long as I, okay, okay, I heard that as long as I make, I'll rephrase that question slightly. I heard that as long as I make some appointments while on vacation, this qualifies as a business trip. Okay, okay, yeah, I have to smile on that because the question started by saying I have heard. Well, where have you heard? So let me guess. I guess you have heard it by reading a blog online or listening to somebody's seminar online or in real life. And I can guarantee you that what you were reading or listening, whoever was doing that was not a specialist in taxation. That was probably somebody who is just general business promoter or a reporter, a journalist, and anyway, somebody who does not understand the rules basically when it comes to taxes. That will not fly when you talk to the IRS. So again, question was okay, if I'm on vacation and making some business appointments, okay, let's go a little bit more into detail here and talk about the rules. In order for the trip to be deductible, the starting point is it needs to have a business purpose. We talked before, our examples was, so if you are going to a seminar or a convention, it's pretty clear that you are going there for business purpose. But the question mentioned vacation, and I didn't talk about that during my presentation on this webinar. So let's discuss a little more about what happens in that. Can you combine business with pleasure? Like have business trip combined with vacation and still have deductions for the IRS? The answer is yes, but we need to be careful and talk more about details. Question number one here will be, what was the quote unquote primary purpose of your trip? And primary means, was it business trip with a little bit of vacation, or was it vacation with a little bit of business? That question makes a whole lot of difference, and this is why. The IRS says if the primary purpose of the trip was business, then you are allowed to deduct transportation. So meaning flying to and from, you can deduct as long as primarily the trip was for business. What is a typical example of that situation? Let's say that you are going on a business conference, and that conference is Monday through Thursday. 4 days you spend at the convention, and then you stay in that place or through the weekend and return back home on Monday. So you spend Friday and the Saturday and Sunday sightseeing, having fun in that place. Does the trip qualify? The trip can very easily be argued as being primarily for business. So your extra 3 days of personal vacation there is not a problem for transportation. Meaning is your trip to and from will be 100% deductible. So you took care of the tickets. What else happens? While you are there, you spend a total of 8 days. So 7 days actually in my example. So 4 days was attending conference, 3 days was personal. So your accommodation, your hotel bill for 4 nights will be considered deductible. For the personal days, no, it won't be deductible. Same with meals. Meals during your business days will be deductible. Meals during your vacation days after that will not be. But you will be able to at least deduct 100% of the round trip cost, which works differently if primary purpose was vacation, which example will be this. Let's say you go to your favorite destination for recreation and whatever that place is. Let's say that you are going to San Francisco and for your vacation with your family. However, while you are there, you want to take opportunity to network with some of fellow San Francisco investors or realtors, and you are going to attend a special function because on one of those days, and you specifically plan your vacation around that day because on one of these days, let's say on a Saturday, their local association has a big meeting and you want to attend that meeting and you specifically arranged your vacation around that day so you can make it there and network with other business professionals. That is fine. It still will not make the trip primarily for business because you spend half a day at this meeting and the rest of your trip was vacation. So you will not be able to deduct transportation. The IRS will say you're going to and from was personal. But that 1 day of business that you spend there, you can treat as business deduction, meaning what is? If that meeting has cost of attendance, then definitely cost of attendance. If you had to travel there, like you had a cab to take you from hotel to the place of the meeting and back, that will be deductible. Your meals during that day, if you went to lunch in the middle of that meeting, could count as business deduction, but that's about it. So the business portion expenses will count, not transportation. So whenever we talk about vacation, be careful about the distinction between primarily business or primarily personal. So when you plan your itinerary for your vacations, if you want to deduct the cost of transportation to and from, make sure that that cost is structured in the that the trip is structured in the way where most of the trip is devoted to business, and if challenged by the IRS, you will not have a hard time proving that that was the case and the trip was primarily for business. And with that, we are at our 1 hour mark for the webinar. I appreciate everybody's time and attention to these topics. I hope our Q&A session was helpful. If you did not see the actual presentation, please look at the previous video on our YouTube, which was a presentation explaining rules on travel, meals, and entertainment, as well as other videos that we have there. Read the blog on our website, michaelplugs.com. And if you need help with tax returns, remember our company, REI Tax Firm, and you can find us at reitaxfirm.com. We are specializing in real estate businesses, only work with realtors and real estate investors in this business for 20 years, and we'll be happy to help you with any tax issues. Thank you very much. Thanks for watching our webinars and Q&A session. I'm Michael Platz, Black Belt in Real Estate Taxation, michaelplatz.com. Thank you.